Now we're live. All right, cool. And I lost one of my feeds, so give me 1 second here. There we go. Wake up. Awesome. I got a ticker on the bottom of my screen now. How cool is that? Okay, so looking at this move, we're basically hitting that 200 period, which is right in that 50% retracement zone from that gap down in the pre-market. And we can expect some volatility pretty soon here. I'm thinking we're going to start getting into what's known as the witching hour of the Quad Witch Day. And we're probably going to see some quick time reversals here, or possibly just a massive break in one direction or another. But just know that these are going to be fast, volatile moves, and market makers are going to step in and control them. So be ready to get in and out of trades like really, really fast. In fact, I'm going to kind of be a little bit quiet about it because I'm going to be doing this on my futures trading. Let me get that screen going here. All right, maximize you. Bring you up over here. What's my frame rate? That looks like really blurry on the YouTube channel for some reason. Let me double check that. Ooh, I'm missing the move already. Package this up here. Shift that as unprofessionally as I can into the corner here so I can tuck it out of the way and keep mindful of what I am looking at. So essentially, ordinarily I would have a four-way grid on the futures chart here and run a 10-second, a 1 minute, 5 minute, and a 1 hour chart. But in this case, we can just use the sentiment on the 1 minute chart for SPY to trade these little reactions in the 10-second chart. And let's see if I can catch at least one of these trades live so we can make a little history on this wonderful quad witching day. But these candles will get progressively fast into the close today. Very typically. All right, let me see if I can get. I think my frame rate's a little low on YouTube. Let me double check that. Oh, that doesn't look bad. All right, we can live with that.
That doesn't look bad. All right. We can live with that. That doesn't look bad.
All right, gotta make sure I cut that echo out. Good deal. I just want to make sure we're, in the realm of visible. All right, setting up a little bar spinner bar right here on the 1 minute chart. Let's see if we can catch a quick bearish trade on that. Too many moving parts to do this all at once. It's a lot of fun, but it's challenging. A little bit too late to sell that, but I think we're in good momentum, at least to the lower band here. Double checked out the 5 minute chart, and we're seeing it's supporting right on that 8 period. So I'm going to wait and see if this breaks. That's a nice clean looking evening star to me though. And I want to see if there's price action going to fall through that 8 period. And we're watching the clock on that candle. That 5 minute candle still has some time in it. So we can scalp the little moves on the 1 minute chart here and kind of take advantage of these little dojis, but there's going to be a point where it finds support. And typically when you have an evening star like this, you get support clean across the first candle. So that would be about 384, 87 on SPY here. And this is where we'd be likely to see that little touch there. There's a wick touched right to the 8 period. So let's wait for this to break over or give us a signal that we can go long or short. There's that break. And that 5-minute candle, probably about the last 20 seconds here, pretty quick. What I'd like to see is continuation on that, and I'm sorry that it dropped my futures chart off at the wrong time. We're looking for a trend line break here too, so just be aware that if you're going to try and trade this, it's very volatile, very risky trading. And I'm trading MES contracts, so it's not like I'm going to give myself a heart attack here. So man, that DOM is wild with that move. Notice I didn't go short till I saw a setup. That's not a setup. This is just a doji on that angular support line. And if you want to see, I'm just literally using my phone on the DOM, pouncing on the right moment here. There we go. That might be the break we're looking for. Let's see. We get a little pullback. Got a little bit of a double bottom here, and I'm kind of concerned that this is going to push back above resistance here for a moment. And anytime you have a double bottom in a choppy descending trend like this, note that typically you'll find L1, R1, L2, or L1, H1, L2. The play on a double bottom is typically the break across the resistance zone, which is the top here, 38.85. And it didn't get there, it rejected. So now we're looking for a support break. The idea is you want to see a double bottom reversal literally turn into a bear flag. And if you're looking at this, this is your trend, this is your accumulation. The idea is you want to make a measured move down into liquidity down here and trade the second half of the measured move. I'm still not confident that this is going to reject this trend line yet. Hello, hello. I see your comments. I just can't type. My hands are busy. I got one on a mouse and one on a phone, so I'm working here. I'll run out with one. Watch this just go straight sideways into the bell on me. Now there's the break. Ah, give me that chart back. Thank you. That's a nice inverted hammer on that 5-minute chart, but not quite convinced it's going to close there just yet. Now this is supporting for a moment. I'll put a trailer on it just in case it decides to rip my face off. Nailed me. Try again. As soon as I started seeing this little doji here, I'm like, nope, this is time for a trailing stop, and that is why. And this guy closed a doji, so we're going to see if we get into a morning star on this. Even though this is a nice rising channel with a break, they don't always work out that way. Sometimes it'll just sit there and poke out and then run right back up. I might not get a good trade at all into this. This is just not a great time to be trading. I'm doing this because it's entertaining for me and you. Oh, hey, Best Buy's up a little bit. And this is the trouble with trading on a quad witch day into the closing hour. The price action is just not going to make much sense. I haven't traded futures through one yet, so this is kind of usually a taboo time for futures traders. They don't like to do this. Yeah, it looks like we will get close to completing that morning star pattern here. I'll see if I can get some of that on the pullback here. Nope, too late. That's a nice clean move though. Look at this little leg, pullback, leg. That's measured move. It's already done. This will run right to the top of that bar. Ah, we're breaking out. Let's see if we can close that with a wick. The idea is if you're looking at what looks like a okay setup, you can take an entry on it very cautiously, but until I see another very clean setup, basically I can just sit here and watch this. And as I was saying, we might not get a good trade at all on this. Who knows? Ah, nice breakdown. Throw that in with a really tight trailer. Ah, grab me. No bueno. That was a nice reversal candle and it didn't happen. Bad, bad, bad juju. This is the witching hour indeed. I could just take this time to just talk through some strategies, so we can roll that way. Essentially, we've been kind of walking people through this this whole situation, learning how to trade strangles with Ford. And one of our members in the group was asking a question earlier, so I guess we can take a recording of that. I was explaining how I use different accounts to do different things, and I use commission-free trading accounts, except for my futures trading account, to accomplish some different things. Pardon me. So I don't know if you guys have heard of Webull. Webull's great, commission-free trading, and in a cash account, you can day trade options all day long, even under a PDT size account. Like you can be under $25,000 in a cash account, trade all the options you want in a day as long as you trade them on settled funds. And options trades settle overnight. So you can do it again and again every day, just as long as you don't make any good faith violations. That's kind of something to know. If you run out of settled funds for the day, stop trading. If you try to enter a trade on funds that haven't settled from the previous day or the day you're trading, if you're trading options, and then you day trade on that, you get a good faith violation, and you get a couple, 3 of those, they will lock your account up for 90 days so you can't day trade, and that's not pleasant. In some cases, they will penalize you and lock you up from trading altogether for 90 days. So that'd be a bad scene. You don't want a good faith violation too far. Every once in a while, if it's an emergency situation, I might use one, but yeah, I try to keep that down to no more than 1 a year. The idea is you can use a cash settled account pretty much infinitely up to your limit of settled funds. So I use that for scalping SPY options. I'll scalp forward options if I'm day trading them. I'll scalp Microsoft options, whatever's moving, whatever's trading, Tesla, whatever it is. I'll trade that with day trading with that Webull account. It's great for that. As far as swing trading options or selling to open options or complex option strategies, I actually use my Robinhood account for that. I can go and get all the data I need on Webull to leg in and out of these strangles, and I can also make those into complex legs. I can sell against the long position, and I can leg those into a can't lose position, and then when I'm in a zero risk position, I can use the cash elsewhere. I can take and enter other trades with that cash, so I'm not outlaying a ton of money in one trade. I can literally lock it in as a no lose and go and make money somewhere else. So essentially, I've been teaching people in many different tiers at the same time. So I got absolute beginners with options, and I've got people with some options experience, and I've got people with lots of options experience, and I'm able to show them all the different things you can do with those strategies. And in teaching the complex strategy, I explain this is the beginner part, you do this with the beginner part. This is the intermediate part, you do this with the intermediate part of the trade, and so on and so forth. So I can kind of diversify that understanding of how to trade those. And I'm a keep it simple kind of guy. I trade as simply as I possibly can. So there's a lot of math involved in options, obviously, but the idea is if you find an equity that trades at a low price and has much lower time decay than most other equities out there for options volatility, that is, you stick with it until it's no longer viable to do that with. So Ford's a perfect candidate. It's trading at 15 bucks average. You know, you can go in at the money for a week expiration. You know, they're like 20, 30 bucks a contract, whatever. And you can play with the volatility on that. See, I mean, if you're looking at this sucker just grinding sideways all week or all day, you can trade, you know, you would enter your calls down here after the open, enter your puts down here after that run up, and basically the profit you have in those calls that you bought first is locked in with those puts. And if you're just at the money with those, you are in a cash cushion situation, although your trade position is a strangle. You're on both sides of price, right? The idea is later on you can go and either day trade that put when it comes back down and brings you some profit, and then later on day trade the call when it comes either back to its median entry point or gives you a little profit, and be done with that. Or you can carry it overnight or over the weekend in this case, and leg out of it on Monday, so it doesn't count as day trades, depending on which account you're trading it in. If you're trading it in an account that you want to run multi-leg strategies, you can go and, like, you know, buy your calls here, buy your puts there, go and sell a cash covered put one strike below your long put here, and then go and sell a call one strike further out of the money from your long call here. So you can lock in profit on both those legs, and then you can either day trade them into the close if the price action approves of it. This is not something I would do in this leg here. Or you can wait until Monday, leg out of the short positions, take profit on them, and then roll them back in. You can roll them in and out, in and out. And if it's an expiration on next Friday, you want to be done with all of this by about Thursday at the very latest, but ideally end of Wednesday. And then you can close the whole position. So you can literally roll it out to the next week on Wednesday or Thursday for the long position, and in the meantime you've generated income on a couple days of swinging in and out of the short options in that time frame. So it's really a neat process, and it's a income generating process, and it also gives you experience to trade multi-leg options with confidence, and then you can take that and turn it into a strategy on SPY. And you can start making 200-300% returns with that. So it's pretty neat what you can do. But the idea is that if you practice this on something that's reasonable, relatively low priced, and you perfect your skills on something that's not going to blow your account up, you're going to gain from it. You're going to gain the knowledge. You're going to gain a little cash, at the very least, break even, and at the same time you're going to gain a new understanding for how to make complex option strategies work. So just kind of dropping some knowledge on you, since this really didn't give me a nice setup for a trade into the close, but I thought I would just make a couple scalps and call it a day, but it's just not cooperating with me. And it's hard for me to talk and day trade at the same time. I'd rather do it on my own time, and I made a few good trades today. I'm very happy with my returns for the week. I'll be ready for next week and do it again. But I like to spread knowledge and understanding for complex options trading wherever I go, whatever I'm talking about, because not everybody can trade them. But if you ever found out how easy it is to generate income on options without having to be having your heart pounding out of your chest when you're in a long position going, what did I just do? Especially if you're a new options trader, there's ways to completely take all the stress out of that and just literally use your price action to just generate income. I mean, it's so simple. Once you understand the price action, the rest is like riding a bike. Anyway, I guess I got a couple more minutes. I can go and take a look at a couple of stocks we were watching. Let's kick this off the chart here. So Disney broke that support level that I was talking about, that 110 level, and now we're starting to trend. Let's look a little further. We've made a clean measured move, all right, and it's essentially the same thing we saw on SPY. Clean measured move. There's your whole trend accumulation. There's your mirror, or your second leg, right there. Clean measured move. Okay. Starting to rebound a little bit off the floor here, but I don't think Disney is just yet. And here's why. We broke an angular support on this descending wedge, which is not a good thing. Wrong chart. And if you look at what we were looking at for the lineup of this being a bullish measured move, that plan is just about disqualified here. And if we break that $100 area, we can start to look at retracing about half or more of this previous trend. So we can start setting our targets all the way down to like 90 bucks. It is possible. I'm hoping that this market doesn't remain this bearish, but there's a good chance it can. Kind of in a zone where it's no man's land. This is a trader's market, and more than anything, it's an options trader's market. So make your swing trades, that's fine, but if you find yourself in a position like I was with the bearish position on Disney that I established, part of that yesterday, I went ahead and in this low range price, while I'm in profit with my put debit spreads with plenty of time on them, I went ahead and opened a call debit spread cautionarily, and I set it out of the money enough to where it was very low risk with high reward possibilities. So if this thing does decide to about face and the market decides to make measured moves in the bullish side, I'm prepared. I'm well ahead of it. If not, I'll take a small loss on the call debit spread and keep riding the put debit spreads till we sit at that $100 bill level and make a considerable profit doing so. Looking again at SPY, let me turn these lights off a little bit. You know, we had that doji day yesterday. The idea was you get the old bar spinner bar setup. Wait, that wasn't yesterday. The day before yesterday was our doji day. We were expecting this to either make a half or whole measured move. It made half the measured move yesterday, finished it today, and we're probably likely to close with a doji down here. Now, that doesn't signify a reversal. A doji is an indecision candle, correct? So we're sitting in a clean support area. So let's look at where we are compared to price action zones. We're right in the middle of this control bar here from the July 18th there, and our doji's body sits right in an airspace from this previous crash channel down here. Okay, we've got resistance and very little support here, and we're looking at like a push down to like 378, 377. Yesterday we were saying if we cracked through that that 390 and then 388 were the critical supports. We knew that 382 was the support level, and it ran right to that baby. 382.11 was the low of the day. Easy stuff to predict, right? We knew that was coming. But here, going into the close on the quadwidge day, so to speak, it's kind of a no man's land. This is where either you want to be in a neutral position or no position over the weekend, because I'm going to see some volatility coming on Monday, more than likely. And I think there's going to be a lot of eyes on it too. So that's going to kind of tell us what our longer term trend is going to look like. And this just looks a lot more bearish than bullish at the moment. So about the only other saving grace support area I can see is maybe, well, not really. We got 380. So key support area will be 382 and 380 next week. If we snap that, yeah, we're going to take a dive. Sorry. It's a trader's market. What are you going to do? If by some miracle we start to break out of this and we actually do have a reversal form over the next couple of days on Monday, Tuesday, Wednesday, yeah, maybe we can trend on. But it's definitely looking like it'll be either the last hurrah in a tipping bear market, or we could get like we had a few years back where we get that low volume melt up through the month up all the way to December basically. Who knows? We trade what's in front of us, so we're looking short-term trades now. We're not even thinking about long-term trades until this mess is over and we can figure out a direction. Again, I'll try to be forthcoming with swing trade setups and alerts if I can, but I'm not always going to be able to do that in this type of market. It's a trader's market. You can make some swing trades if you're brave enough, if you know how to handle your options and legging in and out of spreads like that. But other than that, I wouldn't really want to hold things very much longer than I had to. Just my opinion. All right, guys. Well, I'm going to sign that off and put this down in the books and call it a week. I think it's time to go out and have a steak dinner or something. I'm going to take the kids out and family out and do something nice tonight. We'll see you guys around.